You have now reached the second tutorial video. This is for the permanent versus term. So this is where you're running presentations where someone says, I don't want to buy cash value life insurance, I'll just buy term insurance, 20-year deposit term or 10-year or annual renewable term, and I'll invest my money in a mutual fund. And so this is the analysis of whether that's always a good idea or whether there are some situations where cash value life insurance is preferable for the client, and that's what this module and illustration will analyze. So before we jump into the permanent versus term, just best practices: if you can watch the main menu video, then watch the tutorial video in the illustration of values module. We talk a lot about how to get the carrier data over into the InsMark essential system. Then watch the video you're watching now, the one with permanent versus term, then watch the tutorial video in the other investments module, and finally the one in the various module. I think that will save you time, and you should know exactly how everything or most everything works at that point. So what we're going to do is click in the permanent versus term, go to create a proposal. Now, in the last video, the tutorial video for illustration of values, we actually entered in a case called John Smith. If you haven't watched that video yet, then you won't see that. You're going to see Clarkson as the workbook file, so that everyone's on the same page. If yours says Clarkson, it's fine. If it doesn't, just click the down arrow. We're going to grab Will Clarkson, grab one of the Will Clarkson cases. And okay, so now this first section is policy data. It's wanting to know which carrier ledger, premiums, cash values, death benefits we're working with. And again, that was explained extensively in the tutorial in the illustration of values module, so we're not going to go over it again here. We are going to use the Will Clarkson case, which is one of the cases that comes with the system. But for the sample cases, we'll just use that one for this term and invest the difference comparison. Now, this is very important. I want you to look at this next choice. It's one of the most powerful parts of the InsMark Essential system. You're going to absolutely love what I'm going to show you next. So it says, include a comparison of policy charges and fees versus investment charges and fees. All right, what's that? So you can check that or not, but make sure it's checked, and then click schedule. And what this is asking is it wants to know the total policy costs in your cash value life insurance product. And what this is saying is you can enter any two columns, so if you know, and it'll calculate the third. So if you know the mortality charges each year and the total admin charges each year, it'll calculate the total policy costs. Now, what I'm going to do is just copy and paste some policy charges. This is actually for a 46-year-old. In this case, is for a 40-year-old, but that's okay. And it's for the same $750,000 death benefit. That's okay. It's just going to overstate the policy costs a little bit. And with this particular carrier, I can just show total costs. So I show only some carriers. You have to ask them, but some carriers will show you the total policy costs rather than breaking it down between the mortality charges and the admin charges. It just makes it simpler. So in this case, I have the total policy costs, and what I'm going to do is put my cursor right next to total charges. I'm going to hold down the Alt key until it turns into a little, see that little box? And then I'm going to left click and copy all the way down. This is the first 25 years of policy, total policy costs. I'm going to release, and then there's a little option, copy to the clipboard. I'm going to go right here, click here, and then I'm in the first cell, and then I'm going to do Control V as in Victor, and there it is. It enters in the policy costs, and then I'm going to enter in the next few years of policy costs. So I'm going to bring back my ledger again. This, I promise you, when you see what this does, it's well worth the effort. So let's enter in the next 25 years. So again, I'm going to put the cursor right next to total charges. I'm going to hold down the Alt key with my left hand. My right hand, I'm going to left click, and then I'm going to highlight these policy charges all the way down. I'm going to release, and then copy to the clipboard. And we'll come in here and Control V as in Victor. Okay, and then these last few years, if I look at my ledger again, I believe the last few years, the policy charges total, because the cash values and death benefits were the same. So the policy charges thereafter were $90 each year. And one thing I'll show you is if you want to enter numbers directly in the array, if you hit, I'm hitting the equals key, and it's kind of nifty, it repeats the previous entry, and then I'm going to click OK. So now I've entered in all the policy charges, and now I'm going to show you what it does here in just a second. It's one of the most powerful things in the system. So, okay, we're going to illustrate for 60 years, tax bracket, let's say 35%. Okay. What do you want to call the side fund? We'll say, well, and one of the great things about the InsMark Essential system is you can model the side investment. They buy term and invest the difference. We've got literally every different type of possible side fund and its corresponding taxation. So, equity accounts with turnover rates and dividend taxation, you can blend in all of that. But in this particular case, just to keep it easy, we'll say we'll just use a tax-exempt unit trust earning 5%. Let's say the management fee is 75 basis points. Fair enough? The last thing we need to do is we need to enter how we're going to calculate the term costs. And you can either put it, there's a clear button here. I'm not sure what you're looking at. I'll just start with it being clear. And then you can either enter total premium or rates per thousand. And for example, let's say I had a 20-year deposit, level term. I could put in $1,000 a year and use my equals key, and there we go, I'd be done. Or I'm going to clear it. Another thing you can do is you can enter in, we have a sample ART rate card in here, so I'm just going to say rates per thousand and import, and then it gives you a rates per thousand card. You can also click the store button, and you can put in your own term rate card so that it will calculate the term premium for any ART. So however you want to put it in, it's very, very quick and easy. And then the last thing I kind of like to do, you can schedule the term death benefit, but I kind of like to make the term and a side fund match the death benefit that we're providing with the cash value product. So I'm going to click match the death benefit in all years, meaning that the side fund plus the term insurance has to equal the death benefit of the cash value product. So it's apples and apples. All right, now we're pretty much done. And then these are some questions about some cosmetic things, how you want to show if the side fund goes to zero, do you want it to accumulate in a negative values, or just show zeros, or just stop? And then you can, there's some other questions here that are mostly cosmetics. Do you want to add a cover page, that kind of thing. Now we get down to the print section, and I spent quite a bit of time on how the printer section works in the illustration of values module. Won't do it again here, it's fairly straightforward, but I want to show you comparison of plan costs. And I'm going to do the quick preview so we can just look at that report. And I want to show you what I was talking about at the beginning, how powerful this can be. Okay, so here comes our report. Comparison of plan costs. Let me show you what's going on here. So what we're showing is this is the term insurance premium in column 2, and then there's our management fee on our side investment. That was that 75 basis points. What you're going to see over 30 years is the cumulative cost with the term insurance plus the management fees that are typically asset-based management fees added up to $218,662. The total costs in the cash value life insurance product were only $135,000. That's a very big difference. And the reason for that is that unlike side funds, which have asset-based fees that go up as the accounts grow, cash value products are front-end loaded and then typically have a declining amount of charge for the client over time. So this is part of the reason why if you have a short-term need, term insurance makes sense, but if you, and a side fund, mutual fund, what have you. But if you have a long-term need and the cash flow to buy whatever you want, and you're in a relatively high tax rate, 35% or more, well then cash value life insurance can be a far better option, and this is part of why, because of the cumulative cost differential. Now let's take a look at, I'm just going to now click print preview to show all the reports. Okay, so, and this is all our suggested reports. There's your comparison, the one we just looked at. I'm going to jump down to, here's the numbers page. Okay, So we're proposing $15,000 a year for 15 years in the cash value product. There's the alternative term premium, tax exempt unit trust. You can see how it grows over time. The point I wanted to make was this. You see, we took $78,750 out in year 25, and then we took $25,000 a year out of the cash value product, and we forced the term side fund, in this case the tax exempt unit trust, to match us dollar for dollar on tax-free distributions. Net after tax distributions. And what you see is, by age 71, the tax-exempt unit trust is depleted, and we're still able to produce income to the client, and the policy continues on. So that is what is so powerful about this presentation. And the comparison of plan costs is testing the eggs in the omelet, if you will, this report being the omelet, but the eggs in the omelet. Why are we able to do this? And the answer is because our cost structure is less over time. Also the tax-deferred, tax-free growth, tax-free loans, and so on. And also paying with mortality charges inside the policy with pre-tax interest that then is never taxed, whereas the term premium has to be paid with after-tax dollars. So all of those reasons combine to give some clients a much better result with cash value products versus term, and invest the difference. Okay, so back here, again, we covered this in the illustration of values module. Each time you run an InsMark illustration, you can give it a name, and you can pick which digital workbook, which client, if you will, you want to store that particular InsMark presentation in. I won't spend a lot of time again on that. That was covered in the illustration of values module. If you can, now that you've watched this video, please proceed to other investments versus your policy and watch the tutorial video in that section.